Welcome back, everyone, to another Beyond Moon, the Crypto Wealth Series of Jerry Hall. Today's conversation is with Anthony from iTrustCapital. We're going to talk about their product, their self-directed Roth IRA. We're going to take a look at the infrastructure, their customer service, the pros and cons. I think this is a very important subject, not necessarily iTrustCapital as a subject matter, but the thinking that it's not always how much you make, it's how much you keep. Tax-free disbursements from a retirement account when it's time to retire can be very advantageous, specifically for those of us that are investing in digital assets and expect monstrous returns on our investment. Monstrous returns generally mean monstrous tax liability. Well, in the case of these products like iTrustCapital, there's a solution for that. Enjoy this conversation and remember to do your research. Look at competitors, look at fee structures, do the math, break out the calculator, do the work up front, understand what you're getting involved in. But for many of us, this could be a very advantageous capital account to have, something to add into the toolbox. I hope you enjoy that conversation because it's coming up right now. All right, Anthony, let's get into this conversation. How are you, young man?
I'm doing very well. Thank you so much for having me on, Jerry. Very good to connect with you.
No, definitely. So I have been checking out iTrustCapital for a while. Now, one of the things that I found really interesting is how a Roth IRA could be self-directed and not need to be part of a larger investment bank. So obviously some regulations and some rules came down the pipe that opened a door, from a regulation standpoint, to allow you, right, to do this. Why don't we walk through kind of the nuts and bolts of what iTrustCapital is before we start getting into the like customer benefits and da 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 da. So let's take a look at the infrastructure and how you guys are put together.
Yeah, for sure. So, I mean, self-directed IRAs from an investor who is a U.S. citizen is probably the most exciting type of shelter that really exists. I mean, a lot of people grow up hearing about venture firms or hedge funds and all these different structures where investors kind of have their own little thing going on. It's a self-directed IRA, and a Roth IRA in particular even has more benefits. And so it's a self-directed account. It allows you to hold any type of approved assets. And we are the first platform in the US that has really allowed crypto assets or digital assets to be placed in these self-directed accounts. We also have a 24/7 trading platform, and we have institutional custody. So it allows you to get exposure to the assets that you probably love and think are going to be some of the best performing assets in the world with immense tax benefits.
Right. Well, here's the thing. As a U.S. citizen, like before iTrustCapital, I've had an IRA, a Roth IRA with my Charles Schwab account. Mm-hmm. And although there are many advantages, I will tell you that with my Schwab account, the access to a wide array of assets, I wouldn't categorize it as having a wide array of assets. Now there are assets available, right? Mm-hmm. But it obviously not digital currencies for sure, with the exception of one OTC product from Barry Silbert's group.
Grayscale.
Grayscale's GBTC. Mm-hmm. That is the only product available in my Charles Schwab Roth IRA. Yes. What does it look like for somebody who's considering this self-directed digital asset Roth IRA with iTrustCapital? What does it look like to interact with their already existing stuff? So a lot of people may have been working for an employer, they've already got a 401k, they've got an IRA maybe set up with their brokerage like I do, or a Roth IRA, and they're considering, I guess the word would be migrating.
Yeah, it's a good general word. Yeah.
Okay,
And so,
what does that look like?
yeah, so there's kind of three ways to work with us or to have an account with us. And the first is a cash contribution. So all American citizens, you're able to make contributions to IRAs, and that is 6 to 7,000 maximum per year. It's
Right.
depending on your age, and that is kind of the low and slow. You stuff in money, 6 to 7,000 per year, and you get that moving. Now the second option, and these can all be combined, right? Keep in mind, second option would be an IRA transfer. So if you have an IRA at, say, Schwab, Fidelity, Vanguard, any of these players, you can do an IRA to IRA transfer where you would liquidate some or all of your assets there, transfer it here. It's a non-taxable event. It arrives as US dollars, FDIC insured, and then you can obviously buy and sell on our platform at your leisure. The third option, and again, these can all be combined if you have all these different options, is a rollover. Now, a rollover is typically associated with an employer plan, maybe a
Right.
401k, maybe a 403b. Typically, you have to have left the employer. If not, if you're still employed, usually you need to be 59 and a half to be able to roll those over. It's not our rule. It's typically the employer's rule. So you can always give them a call if someone's listening, has a current 401k and wants to see if it's mobile. But those are the three options. And to speak a little bit on GBTC, Grayscale, I think that they were really good to kind of lead the way in allowing that within IRAs. The problem is it often trades at a very high premium. So if you look at what it's trading at, you're going to pay significantly more than the underlying Bitcoin, right? So you're overpaying for Bitcoin. It also has a 2% AUM fee, an annual management fee, 2%, which can add up over time. I mean, the more money you're making, 2% of $100,000 isn't really fun to pay, right? And so for us, you're holding physical crypto assets stored in institutional custody. You have ownership and claim on those assets, and you're only paying 1% per trade. So still cheaper than Coinbase.
Right. Now, I did notice that. So one of the things, maybe I guess is the time to do it. So in preparation of this interview and in my kind of my due diligence of iTrustCapital, I took a look at what else is available in the marketplace that I would consider maybe, well, considerable comps, considerable, comparables to you guys. And only one really stood out. It was called Kingdom Trust.
Mm-hmm.
And so I pulled up your rate sheet, right? Your fees, and I pulled up their fees. And one of the things I noticed was in the documentation on your site was from the account standpoint. Now, this isn't anything to do with anything else, but other than just running the account, there's just a straight flat fee of the 23, whatever it is per month.
$29.95.
Yeah. That's okay. I knew it was something like a $29.95 per month, which is only what, $358 a year, whatever it is.
Mm-hmm.
Then I went and looked at Kingdom Trust, and they have a rate also. But then I saw they had some other goodies in there, and this isn't to badmouth or down talk your competition, but I didn't notice that they had annual fees that were also on top of their regular forward monthly fees.
And those grow in proportion to the value of your
to the
account,
size of the account,
unfortunately.
because they're percentages of the value of the account.
Mm-hmm.
So it appears, right? It appears that you folks are in the class that you're in, you're the most affordable, which is
Yes.
excellent. That's a good place to be. My question would be, because I see your field, right? Your vertical. I think more and more competition is going to come to this space as time goes on.
Certainly.
And so in your quote unquote bylaws or plan structures, you have revisionary time periods where you're going to revise these things, right?
Mm-hmm.
And so is it a corporate core principle to remain competitive from a pricing standpoint as this market matures and more competition comes on to the scene, et cetera? Tell us some of what you guys are thinking in that line.
Yeah, definitely. So I do think that, and I'm kind of speaking from my opinion on the culture of the organization and how we interact with our clients. I think we do have a social contract that plans to be the lowest cost provider in the space, like long term. there's kind of four things that are, I think most people should really focus on when looking at us or any competitors comparables. One, what are the fees, right? And by far and away, we're the lowest fee provider, so that's easy. But number two is the custody, right? That's very important. Is how are these assets being stored? We're very, very proud to be working with Curve, CURV, and you can learn more on our website. But they're an institutional wallet provider who is, in my opinion, top three provider in the space to keep the assets secure. Number three is a platform, right? If you can't log in 24/7 and liquidate your assets, or at least just take a peek at your portfolio, it's to be in the 21st century and not have that is investing in digital assets is weird. And I can say that some players out there who are competing with us don't even have that. And then fourth is definitely the team. I mean, iTrustCapital.com/team. We're very transparent about our team and what we're building here. We plan to be the premier player in the space for a while. And we expect, Fidelity, Vanguard, Charles Schwab to come around eventually, and expecting to remain the best even when they come around.
Right. Well, I'll tell you, so when I was looking at what would be pros and cons, right? I kind of do that little plus and minus kind of thing. And so when I was looking at pros and cons of an account on a platform such as yours, my thinking ventured beyond a retirement account.
Mm-hmm.
And I started thinking about, okay, one of the ways I've kind of utilized my involvement, because I have this, I'm in this space every day. I'm either looking at news, reading articles, talking to other professionals in the industry, what have you. I'm deep in this crypto asset space. And there are times where I've liquidated one asset or a portion of it to take advantage of the price arbitrage that particular moment between that and another asset that I want to have, right? So this asset goes down 2% and that asset's gone up 4%. Well, taking the asset that went up 4% and buying the asset that went down 2%, outside of a situation like yours, I've got a taxable event, which in the grand scheme of things at the end of each year has a tendency to be a net liability against my gains.
And it destroys your trade usually, unfortunately.
It can.
Yeah.
Unless the arbitrage is monstrous.
Mm-hmm.
Then I started to run some numbers if I was doing it within an iTrustCapital Roth IRA.
Mm-hmm.
And the only negative, I mean, there was a lot of positives to it, right? Because of the tax shelter function of the Roth IRA.
Yes.
Then I started thinking about it and I thought, okay, well, the only downside that I could come up with was if the funds that I generate were needed prior to the 58 and a half or 59 years old that I would need to be before I could start getting disbursements. For somebody like me who's going to turn 55 here in 2 months, that's not that big a time to wait. It is for a 35-year-old or a 36-year-old. However, if I was a 35 or 36-year-old or a 25-year-old or even a 21-year-old, and I didn't have a lot of money to invest in it, and I was going to take advantage of 2 or 3% swings and try to build that up over time, the shelter of the Roth IRA makes a lot of sense if I'm going to build wealth long term. Obviously, you can't reap the rewards of this in real time like you can if you're just trading on an exchange.
Yeah, and just to kind of interject there, which is that is the common thought process around, say, a Roth IRA is the 59.5. And there's two different verticals we can look at to actually make this still very attractive for someone who's even young and investing. So one, you can still always pull out your principal. You can and you can also pull out even profits early for varying qualifying distributions, like a first home purchase, advanced education, medical expenses, and all those things should be worked with a proper financial planner or a tax accountant to make sure you're taking those distributions properly. But that is on the table. And even better, and even on the better side, we are investing in digital assets, right? And so I have a very, from a personal, not the views of iTrust, but personally, I think the world of early retirement and financial independence is very real for some crypto investors if they're buying the right assets and the market performs how we might expect it to. And you can actually declare early retirement with a Roth IRA, as early as it makes sense. And so I personally will be pulling from my IRAs well before 59 and a half, sometime in my 30s. And so that's also to keep on the table. It's not going to happen overnight, but if someone has a 5 or 10 year time horizon, investing diligently, allocating capital properly, it's early retirement's a possibility, right?
I agree. Wonderful points. I will tell you that I was not aware of the early stated retirement. I did
Mm-hmm.
not know that that was an option. I did know that there were certain things you could do to pull money out of these retirement accounts, 401ks, regular IRAs,
Mm-hmm.
that if they met a certain criteria,
Yeah.
i.e. your first home purchase.
Mm-hmm.
I think I remember the first home purchase and some medical stuff. I remember medical stuff.
Yeah.
No, that's really good to know. And I think it's important for the listeners that might be tuning in. See, part of this whole Beyond Moon series that I'm doing is all about bringing good, sound kind of investor information to the public. Because
For
one of the
sure.
things I've noticed in my limited time in this space, 2.5 years, is the level of financial literacy that I brought to this space. It was a mind-boggling how much I did not know. And it
Yeah.
was my investments that led me down certain rabbit holes, these lines of thinking and then, just passive learning, that I
Mm-hmm.
realized how financially illiterate I was. And I find that it's not uncommon for newer folks to come into this space and really not understand how the monetary system works. How does
Totally.
money, how it's not as simple as buying buying low and selling high. I mean, it's
Mm-hmm.
really a lot more intense than that.
Mm-hmm.
And so to take a look at places where we can even save percentages, 1%, 2%, these are huge things if compounded over time.
Mm-hmm.
You know what I'm saying? And when you start looking at taxation elements that are anywhere from 25 to 12%, those are huge numbers if the underlying capital becomes, large. Even at little,
Totally.
even 12% of $1,000. Nobody wants to pay 120.
Yeah.
You know what
And
I
that's
mean?
not even including state. I mean, I live in California, upwards of 15% state alone. That's only state. And IRAs will shelter you from that, which is, we don't need to get into call me California, but yeah.
Commie, Well, I spent my whole life in Commie, California, and some things you just
I do love
accept.
it here, but yeah, some things
Yeah, I
accept.
mean, it's this or that and the other thing. It's all right, no big deal. So one of the things I thought was really cool, for instance, well, maybe you can draw clarity to this. You have to be 18, correct? You have to be a legal adult.
I believe there are certain ways that a parent can open an account, but you have to have like earned income. And so usually if you're not 18, it's better to work with your accountant. Might just be a 5-10 minute conversation, but that does start falling into a little bit of like kind of tax planning, financial planning. So I'd
Okay.
say the easy answer is 18 plus, but there's
Okay.
actually potential.
Now, okay, so let's say I was 18, because I think these kind of products are so beneficial the younger you are, because not only are you have the ability over time to compound the asset,
Mm-hmm.
right? The appreciation of the asset,
Yep.
but in a sense, you're compounding time.
Mm-hmm.
And
Yep.
that is huge. I wish I would have fully understood compounding interest when I was young. I didn't.
For sure.
You
Agreed.
know what I mean? So I'm thinking, okay, so you're 18 years old. The initial starting the account up is $1,000.
$1,000 minimum. That's correct. And then
Now, there
1%
is no
fee, 10
minimum.
bucks.
There is no minimum for contributions per year. Only the maximum of the $6,000 to $7,000.
Yeah, correct. And currently, just for transparency's sake, contributions are done with a bank wire or with a physical check. So we don't have, well, we have an implemented like a automated system where you could throw in, $50 a week or something like that. So it does
Oh,
require deliberate actions for contributions right now. So most people are making a few a year, right? It's more of like a strategic decision than more of an automated one.
well, when you say check, immediately my checks are so 1980s.
Yeah.
All right, so let me ask you this. So I have an American bank, for instance, Schwab. I have online bill pay and things of that nature.
Mm-hmm.
This is your product is something that I could set up on my online bill pay?
I don't know how the bill pay
Virtual
functions.
check?
Probably not. Unfortunately, most of our system right now is designed to go with wire, and so wires are pretty deliberate actions where you would go in to send money, bank wire transfer. But we are working with different providers. We're looking at various options to have automatic distributions, bill pay type systems, and I would assume that's going to be in the next 60 to 90 days, but could be sooner.
All right. I mean, for those of us that have been in the digital asset space for a while, even just the thought of a wire transfer, it's like, oh, I'm gonna pay those
Agreed.
fees. Oh, how about this? What about
Agreed.
a direct asset deposit, i.e., Bitcoin or XRP or something like that?
Yeah, so that's something we've worked with our. Unfortunately, the IRS has made it pretty objectively clear right now that they want contributions to be made in dollars. So the only time crypto could go into a IRA is if it's already crypto in an IRA. So if a listener happens to have gotten sucked into another crypto IRA company, paying high fees, probably don't have a platform, not very happy, you can actually do a crypto to crypto transfer, an IRA to IRA transfer as crypto, but unfortunately you cannot contribute
Got it.
to it with, yeah.
All right. So that's a pain point that hopefully will get worked out. But as of
Regulatory wise, yeah.
yeah, yeah, I know it's not you guys. You're just following the rules of the game that are put before you.
Yeah.
Okay, well, wire or check. Check sounds like the best way, and that can be mailed, correct?
Yeah. Most people will just kind of expedite it. And the reason why is because most of our activity is interacting with existing financial institutions like custodians,
Mm-hmm.
and they're just so antiquated. I mean, even Fidelity still sends checks. They don't
Mm-hmm.
even do wires or anything. So it's, hopefully we can have some blockchain rails, soon here, right? But unfortunately it's not so much us as it's one of those, it's not me, it's you, it's them. I mean, they're so antiquated. So if we have this new infrastructure and there's no banks are going to accept it, it would be building something that's not going to be adopted right away, but hopefully in the next few years.
Right on. Let's. One of the last kind of topics I want to talk about customer service, and the reason
Mhm.
why I want to talk about customer service is because there are a lot of wonderful, I call them third party platforms. They are definitely centralized entities, and that's okay. I'm thinking of entities like Celsius and Nexo and Cred Earn and things of that nature, even Kingdom Trust.
Mhm.
Um, Customer service is not high on their list of, like, they don't have, I can't call them. I
Mhm.
can't physically pick up the phone and talk to somebody. I have to go through this app or this function of their website, and I have to do a text chat with somebody. It always takes a long time. I've always left frustrated. Um, what is the customer service situation like at iTrustCapital, and how do you folks address that? What's your kind of company
Yeah.
policy?
Yeah, for sure. So I help manage the brand vertical as well as the customer experience vertical. And so customer experience is obviously very important to us. We've kind of combined more of like a all worlds approach. So like customers have a number they can call in. It'll go to the front desk and you get routed to whoever you'd like. We also have a message us type system on the website, where it'll actually be a one-to-one communication though. It goes to another one of our associates. We also have a call scheduling system where you almost always can get a same day scheduled call, sometimes within an hour or two, and it would be with various one of our associates. So we've kind of taken the all approach to give people so many options. What we don't have, and listeners, don't be sad, we don't have a robot you can talk to. I mean, I hate those things. a lot of companies just send you to the robot. We don't have a robot, and we probably won't have one for a while. We like, human to human customer experience.
Well, I'm telling you, I can't speak for everybody, but I will speak for myself. And I don't think it's uncommon with folks in my demographic. I'm the first year of the Gen X generation. So
Mm,
if I was born a little earlier, I'd be a baby boomer.
hmm
And, although I can create an email and I can use a live chat
hmm
and these type of things, when it comes to I have an issue,
hmm
it sucks fighting with typed words to convey context beyond, I'm having a trouble with this. Not to mention, sometimes the vernacular, the vocabulary is different. I don't have your vocabulary.
For sure.
So talking about your site, I'm coming from my perspective, and I'm not necessarily sure what you call this or that or the next thing. I'm just, you know what I
Definitely.
mean? It always been difficult. So to be able to call and speak to a human being, or to be even able to go, and it looks like you got something set up like my Calendly app, and that is I can
hmm
schedule a phone call, and you have a calendar there. It says pick a spot, pick a
Yes.
time you want to talk to somebody. Well, geez, I know that I'm going to be home at 11, and I see an 11 o'clock spot open. I take that. I'm not sitting on the phone for 10 minutes or 20
Yep.
minutes waiting. I can go, all right, 10:59, sit there and you guys call me. And I
Yep.
know it works because I did it. I tried it out and you called me.
Yeah. Yeah, exactly. That's how we interacted. Yeah, I mean, that's, human to human interaction is so important, especially dealing with money, dealing with a new asset class. The last thing anyone should ever have to do is deal with text on a screen when you're dealing with your retirement account and you're dealing with Bitcoin investments, right?
Mm-hmm.
We have highly qualified individuals at the firm. I mean, again, you could look up our team. And so I'm glad you like the calendar system. I love that myself. I mean, just calendar gets booked up, you know who you're going to talk to, that you can leave a message with what we're going to talk about in case you need me or another associate to do some research in advance. For people that have tech issues, our CTO or some of his team members will call you directly and walk you through the tech issue. So customer experience is a huge part of what we're trying to focus on here for sure.
Perfect. Perfect. I tell you what, I'm a fan, right? I'm a fan. I think that there's a tremendous amount of value in Roth IRAs, the tax sheltering, because, like you said earlier in this conversation, there's a good sized percentage of the investors that are investing in this digital asset class that stand to make a nice fair share of wealth.
Mm-hmm.
Well, we know with the taxation, wealth is speculative. I mean, it's not always how much you make, it's how much you keep.
Totally.
You know what I mean? That's kind of the deal. So one of the things in being fair is anybody considering iTrustCapital, or for that matter, any Roth IRA type of
Mm-hmm.
situation, walk through the entire process. Don't just look at the headline. So
Mm-hmm.
try to guesstimate what you think you're going to put in. Try to guesstimate what appreciation value will occur over the time frame that you think that you're going to have it in there, and
Mm-hmm.
then actually do the math working backwards. How
Mm-hmm.
much are the fees going to eat into that? How much is that relative to what you're going to save in tax savings? You know, understand what you're getting involved in before you go do it. And I'll tell you what, if you run the numbers like I have, there is definitely this flat fee thing that you do with the ability to bring those down as your user base grows and the
Oh
competition
yeah.
grows. I think is pretty cool. I really do. I think that is very forward looking.
Mm-hmm.
You know what I mean? Because there are others in your space that are they're skinning it, and I
Oh
understand
yeah.
there's very few of you in this space.
Mm-hmm.
You know what
That's
I
the
mean?
general culture, unfortunately. I mean, our competitors at this point, they're happy to let us get 9 out of 10 customers, and then they'll take the one and charge them a super high fee. And I just don't even understand that type of leadership mentality, but it's what's happening.
Right. Well, competition over time, the cream will rise. The best
There you go.
project best platforms and best customer service, best teams, all that stuff will weed itself out over time.
That's true.
And it's, unfortunate that we are nascent, but we are. So I think it's important for people, like I said, to walk through the whole enchilada, right?
Definitely.
But for younger people, it could be absolutely mind-boggling. The savings from the tax ramifications, because if you run the numbers and you take a look at what's the difference between paying taxes on 20 million and not paying taxes on 20 million.
Oh,
you know what I mean? You start and that's a
yeah.
real number for some of us. You know what I mean? That's a real number.
Yeah. Oh, yeah.
You know,
I mean, this market, has 10x. That's a kind of reasonable expectation. I mean, 100x's happen in this market, right? So, yeah, when you look at the total market capitalization and you even compare it to just, and I think, Ethereum is valued at like, 30 billion, and it has infrastructure that could support Apples of the world in the future. It's an interesting thing to consider. I mean, it doesn't guarantee anything, but it's interesting to look at potential growth and valuations for sure.
well, part of one of the shows I do is called One-on-One. It's a show where I get a lot of folks from, I'm not know if you're familiar with Real Vision Finance.
Yeah, with Raul Paul's product there. Yeah, they're doing great
Okay.
work.
Well, I get a lot. Raul's been on my show a couple of times. There's 7 or 8 of the other guys from that I've found through that platform that have come and done shows with me. I've even made a friendship with several of them.
Awesome.
And they're all saying, even though we make our money in the legacy capital markets right now, Jerry, Bitcoin's coming. Digital assets are coming. It's on the lips of endowment funds, pension plans, family offices, Fidelity with their Fidelity digital assets.
Digital.
It is all real. It's happening. And the only thing that's uncertain is the time horizon. Well, you know what? Your account is set up for that. You kind of have created we'll use the vernacular of digital assets. You've created a wallet system to take advantage of a huge savings on the capital, capturing that capital on the backside of it.
Yeah.
I think people need to know about that, because we don't talk about these things a lot. We talk about DeFi, and we're talking about this partnership and that partnership, and all that stuff is wonderful and exciting. Real brass tacks is companies like iTrustCapital, TaxBit, understanding what these things are, what repercussions these things are going to have when it comes time to consider buying a house and using profits to do it.
Yep.
Right, funding your child's education, and what capital is going to be used to do that. Agreed. So, right on. Are you folks? One last thing. How easy would it be for my quote unquote third-party estate planner or tax attorney or CPA to interact with you, or does that all have to go through me?
Good question. So these are IRAs. The I in IRA stands for individual. So typically individuals are doing all of the decisions and all of the allocation. There are ways to get qualified parties to be able to make decisions for you. It does have to be compliant, etc. If someone's in an extenuating circumstance like that, they can just reach out to me or anyone, and we can make sure those things are organized. But yeah, we work with people's accountants, we work with their tax planners or lawyers, etc. And just kind of going on the topic of education and say even DeFi, right? And it's so bizarre, me being in the industry for a while in the alternative asset space as well as the self-directed IRA space. If you're a US investor and this is new to you, that is completely normal. And now is the time to, whether you work with us, explore what a self-directed IRA can do for you, because so many crypto investors are accumulating all these assets, and and if you're US based, they don't even know that you can be doing it within a tax shelter. And I think that the next 3 to 5 years, that will obviously change. The awareness will grow. And you just think of it as like a new shelter that the ultra rich have venture firms and hedge funds. You have your own type of fund, and it's a Roth IRA, and it's important to take advantage.
I agree. Right on, Anthony. Good job. I've enjoyed this conversation. Any final thoughts before we say goodbye?
No, thank you for having me. I'd say for people who are exciting about different innovations that are happening, say lending markets, say DeFi, say staking, we're very seriously looking into all those different options where this is my vision. I'd say, a few years from now, you'll have your self-directed IRA, say with us, and you'll have all the activity happening in it. You'll hold your crypto. You might be doing some lending. You might be interacting with a Yearn Vault on DeFi. You might be staking your Ethereum 2.0. All of it will be compliantly happening in a tax shelter. So, that's the vision, very likely to become a reality. And for anyone interested, there will be a link in the bio. You can use Jerry's link and you can learn more.
Wow. I like it. I hope you folks have liked it. Thank you for tuning in to Beyond Moon. And until next time, Pura Vida.